Hello traders. Today we want to discuss a simple high probability trade one must know. All right, a high probability trade one must know. All right. So the first thing that we must have before we even consider trading is a high probability trading setup. So I have been talking about this for some time. So you are trading. If I ask you, what have you been trading? What is your trading setup? Do you know your trading setup? All right. So this is the first thing that you want to spend time, okay, and work on. So you want to know exactly what you will be looking for, okay, what you will be trading, and ultimately how to trade it like a pro. In this tutorial, I want to share with you a simple high probability trading setup that you must know. So from today, you will also be able to say that you have a trading setup that you know, that you understand, that you master. Okay, very, very simple. The trading setup that we are looking for will take place, all right, when a financial instrument form a double bottom chart pattern. So a double bottom chart pattern very often is formed at the end of a downtrend. All right, so the price form or any financial instrument forms a double bottom chart pattern. All right. If the financial instrument breaks above the nut or the neckline of the double bottom chart pattern, so here I'm drawing on my chart. This is a double bottom chart pattern on my chart, and here is the neckline. This is the neckline right here. If the price breaks above the neckline and forms, okay, the first higher low above the double bottom chart pattern, that first higher low is a high probability bullish trading setup. So I have mentioned this before and I want to go back to it one more time to refresh your memory and also to clarify more things. All right. So financial instrument form a double bottom chart pattern, breaks above the neckline and form the first higher low above the neckline. That is a high probability trading setup because the double bottom chart pattern is completed when the price breaks above the neckline. Okay. Now, if the financial instrument continue to go up and display the first higher low, this is an invitation to buy. So this is a high probability trading setup, a simple high probability trade setup that one must know. Okay, very simple. Now the next question, now you know the trading setup, how do you trade it? Okay, very good question. So when we recognize a higher probability trading setup like the first higher low above the neckline of a double bottom chart pattern, we will draw a vertical line at that point in time. We'll also draw a warning line. So it's forming a double bottom chart pattern right here. We put our vertical line there and we also put a warning line. The reason why we need to put a warning line there, this will allow us to control the risk because we will be saying priority to bullish signal above the orange line and priority to bearish signal below that orange line. We are ready to buy above. At the same time, we are ready to sell without assuming anything. Okay, we are ready to sell, but below the orange warning line. Okay. So once we have done that, the next step is to implement a multiple time frame trading method. So if you are wondering what is a multiple time frame trading method, what is a top-down trading method, I will recommend that you watch a video that I call, if I remember clearly, or you can YouTube search multiple time frame trading method by 24 Stock Trader YouTube channel. digit 2, digit 4, stock trader YouTube channel. So you can YouTube search multiple time frame trading method by 24 stock trader YouTube channel, or top down trading method by 24 stock trader YouTube channel, and you will be watching that video, and it will help you to understand how to apply a valid multiple time frame trading method. All right. Once you know how to use a multiple time frame trading method, you will start trading like a pro. So the first thing that you are looking for is a high probability trading setup. And here I am showing to you a simple but powerful, high probability trading setup. A first higher low above the neckline of a double bottom chart pattern. So now you can say, if somebody asks you, or you are applying to become a professional trader, and the interviewer asks you a question, what is your trading setup? What is your favorite trading setup? So now you can give one simple example and say to that person, okay, my favorite trading setup is the first higher low above the neckline of a double bottom chart pattern. And they may ask you, can you explain it? How do you trade it? Okay, the next question, how do you trade it? In order to trade this trading setup, one must always use a top-down trading method. So if you look carefully on my chart here, I have that trading setup here. You see the price went down, okay? And then it formed a double bottom chart pattern, okay? Yes or no? Here it is, a double bottom chart pattern, okay? And then the price start going up, yes or no? Start going up. Now, what has happened? Okay, my friend, look, what is the neckline? The neckline is this one here. All right, so I'm going to color the neckline into dark green. Okay, here it is. Can you see on the chart? I'll color it now into pink so you can see it. All right, so this is the pink line here. This is the neckline. What the price has done, the price has formed the first higher low above the neckline, yes or no? Now, you have to understand why the price runs so fast like this. Why? The reason why the price runs so fast, all right, is because a lot of professional traders know this high probability trading setup. So they all jump on it and trade it like a pro using a top-down trading method. I have a warning, okay? The warning is this. If you see this trading setup as is formed here, and the price run fast, forming a long candlestick bar on the trading setup time frame, because I'm on the monthly chart, this is my trading setup time frame. Like it is here, if you see a tall candle like this, you don't want to trade it. You want to wait for a bit of pullback. You can see that after the long candlestick bar, not much was going on here. So as the price tried to go up, people were trying to sell it. You see the shadow on top of this candlestick bar, and also the shadow on top of this candlestick bar. I'm not saying that it may not continue to go up, because we are now in a resistance zone, in a zone of 8786. The financial instrument that we are analyzing here is the Euro GBP, the Euro British Pound currency pair. There's a resistance in the zone of 8786. So as the price is approaching the resistance, after this long candlestick bar, people start selling it, okay? But the warning that I have for you, when a pattern, the trading setup is formed like this, so first higher low after this candlestick bar, if that candlestick bar is too long, you can skip that trading setup because you miss the setup. But there is something else that you can do, okay? Something else very smart that you can do, all right? So here we see, so you see you are watching on the monthly chart, so you put this stock on your watch list, you are watching it, and the price was here where I put the green spot, okay? So to avoid that you miss the bullish party, so to speak, all right, because of this long candlestick bar, you may decide from the monthly chart to drop down to the weekly chart. If you were on a weekly chart and you see a long candlestick and you want to avoid, okay, so if the pattern, you have recognized the pattern on the weekly chart, but you want to avoid a long candlestick bar, then you have to drop down from the weekly chart to the daily chart. Okay, if you're on a daily chart and you see this pattern and you want to avoid, so the price pull back, okay, on the weekly chart like this, and you want to avoid, okay, the long candlestick bar, you will drop down from this point, from the green spot, you will drop down to the daily chart to avoid a long candlestick bar. So the daily chart will give you one candlestick bar, a bullish candlestick bar will pierce out. Hopefully it won't be too long. If it was too long, you drop down again from the daily chart to the 4-hour time frame, so you may catch it before it is too late. So because on the hours here, so on the monthly chart, we're here, we see it. Okay, so I know that, okay, pull back like this. There is a high chart, you may form a higher low, but it's not yet completed. To avoid this long candlestick bar, I may drop down one more time frame to the weekly chart. So you can see that on the weekly chart, after that pullback, we have this candle here. It's not very friendly candle because it went up and then it went down. Not very friendly candlestick bar. All right. But after this candlestick bar is formed, it's not very long. It's not very friendly either. I will give it a chance by putting a line on the high at the closing price, because it went here before coming down. I'll put a line here, and I will give priority to bullish signal above that level, above that high. Okay, that high, see this candlestick here, I'll put a line here because of the shadow here. I'll put it at the closing price. Correction, because of the shadow on top of this candlestick bar, I'll put my line at the closing bar here, and I will be expecting a bullish signal. Okay, and then I will take it from there. Because I'm on the weekly chart, I will use, okay, weekly chart as my trading setup, the 4-hour time frame or the 2-hour time frame. I prefer the 2-hour time frame for my signal, and I will use the 15-minute time frame for my entry. But if I was an aggressive trader and I see the pullback like this at this point in time, all I need to do, I can put a warning line here, like this pink line here. So I will be saying, okay, priority to bullish signal above 7484. Because I see a pullback like this near the neckline. He was trying to retest the neckline. Now I will go straight away, all right, to the 2-hour time frame. All right, it's not very, let's go to the 4-hour time frame. And now we go to the 4-hour time frame. This is not the pink line. The pink line we are looking at, this one, 7484. Yes or no? 7484. That's the line we are looking for, not this one. Okay, 7484. So on the, I will go to the 4-hour time frame because I am an aggressive trader. If I was an aggressive trader, here you see Pierre pull back near that level, 7484. And I will try to enter the trade right here. So as I see it on the 4-hour time frame, pull back near the 7484 here, I will not enter the trade on the 4-hour time frame. Then I will switch to the 50-minute time frame, looking for bullish chart pattern or price breaking above a bearish trend line, and then I will enter the trade in the vicinity of 7484 in this zone, using a top-down trading method, the weekly chart for my trading setup, okay, the 4-hour time frame or 2-hour time frame for my signal, and the 15-minute time frame for my entry. So the point I'm making here is a very simple high probability trading setup when any financial instrument, stock, commodity, futures, indices, all right, has displayed a first higher low above, okay, the neckline of a double bottom chart pattern. Though I'm talking about swing trading, position trading here, we can apply this strategy also for day trading. So you may see this setup on the 2-hour time frame, on the 30-minute time frame, on the hourly time frame. Then you must use a top-down trading method to trade it. So using a top-down trading method consists of using at least 2 time frames. So do not use 1 time frame alone. So if you see the setup on the 30-minute time frame or hourly time frame, do not enter the trade on those time frames. You must use at least 2 time frames. But generally, when we are talking about a top-down trading method or multiple time frame trading method, one must use 3 time frames. All right, it makes sense? We can also use this strategy for scalping. So instead of playing with the stochastic and the RSI, you may look for a double bottom chart pattern plus a higher low on a 5-minute time frame, on a 3-minute time frame, on a 50-minute time frame. Wait for the common center line along the pullback here to be kaput, and then take it from there gently, and it may work beautifully. The most important in trading is the risk control, and the first rule in trading is not to lose, and the second rule in trading is not to forget the first rule. All right. So as always, you learn something new for the first time. You want to go back now to the drawing board, which means you use your demo account. All right. So you want to see whether this thing makes sense. All right. You don't want to just start using it. It's like, all right. You want to go to the space. You want to do some practice first. You don't just start zooming into the space straight away on the first day. So you want to do some preparation. And the preparation, the first preparation, that's what you are doing here. The accumulation of the knowledge, all right, memorizing, understanding what we are discussing here. The next step is the practice. Through the practice, you face different challenges, different variation, different situations, and then you will gain more experiences by overcoming those challenges, by asking questions, all right, by refining, okay, your understanding, your skills, and then from there, you are now ready, okay, to use this simple trading strategy. Do not watch videos on YouTube and go and place a trade straight away. The best approach is to use the YouTube as a library where you are gathering information. But the next step is the practical bit, which is putting to use what you have learned on YouTube, all right, testing it with a live chat, all right, sitting down and doing it as a professional trader. All right. So when we see this trading setup, we do not buy straight away. Okay, very important. All right. We will always apply a top-down trading method. Very important. Now, one more thing. We always check the market environment. That's one more thing we need to check. Okay, from the 1st to the 8th is quite challenging for day traders and swing traders. From the 15th to the 20th of the month is quite challenging for day traders. So looking at the time, the day today is the 24th of September. We are now entering the last week of the month. It's quite nice for day traders and swing traders. Okay, and if you are day trading, we are aware of the gap period. The first 2 hours are the best time when New York or London is open. Those are the best time for day traders. We don't want to enter a swing trade on Monday. Preferably, we prefer a Tuesday. And we don't want to enter at all any swing trade on Fridays. Those are just few steps, few things, you see. This is about the experience, okay, that we are trying to build, okay, instead of throwing money away first before we are ready. So keep your money in your bank, okay? When you are ready, now go gently. When you are ready, you will know. This exercise is about having a specific trading setup, understanding it, mastering it, and trading it day in, day out. So like the professional trader did here, you will be able from now on to recognize this simple but powerful high probability trade one must know. If you have any question or suggestion, this is your time to put in a comment section. Okay, and in due course, I will be recording another video to answer your specific question. We are the TSTWSYS008 traders talking about simple high probability trade one must know. This tutorial is valid for day traders, swing traders, and position traders. Happy trading to you all, and speak to you soon.